Starting to invest can be a confusing experience, so let me break it down the first 5 steps you need to do to get started on the right path. Hi guys, Stanley here. I have been investing in the stock market for the past 14 years, but I really regret not starting out with a proper plan. When I first started investing, I was just getting advice and tips from random strangers or my brokers. There's no strategy, there's no planning. I was just looking for a quick buck. So what happened is every time a stock rises, I will quickly sell it and realize my profit, but every time a stock falls, I'll just hold on to it and make them my long-term investment, because I do not want to realize that loss. After a while, all I have in my portfolio are losing stocks, while stocks that I have sold might have gone on to even higher prices. After making years of mistakes, I finally realized that's not the right way to manage a portfolio. And it is very important to have the right strategy and right philosophy when it comes to investing. So I decided to restart my whole portfolio, and these are the 5 steps that has helped me create my current portfolio that had risen to more than $1 million in value. I hope these 5 steps will help you to create a more structured approach to investing as well. So let's go. Step 1. Remember to have an objective to your investment. Ask yourself, why are you investing in the first place? Are you saving up for something? Is it for your kids' education? Or maybe even retirement? Answering that question will help you understand and also find out your investment time frame. This is very important because investing is not a get-rich-quick scheme. When we invest in a stock, we are actually buying into a business. And like any business, it takes time for your portfolio to slowly generate returns for you. So you really need a reasonable time frame to see some result in your portfolio. Although I recommend seeing your portfolio in terms of decades, you need at least a minimum of 5 years to see some results within your portfolio. Step 2, we need to focus on looking at good investment in the stock market. Although there are thousands of stocks listed on the stock market, all good investment basically falls into 3 main categories. We call this the 3 value that you can find in the stock market. And they are asset value, value that you can find from a stock that is trading so cheaply compared to their net asset value. Or income value, these are companies that are generating very stable income and maybe even a dividend for investors. Or number 3, growth value. These are companies with huge growth potential for the long term. We discuss these 3 values in much more detail within our book Value Investing in Asia, and if you have it, do check them out. Step 3, although we do not need an accounting degree to get started in investing, it is important that we know some basic accounting. This mainly includes the ability to read the financial statement, understanding what is an income statement, a balance sheet, and a cash flow statement. These are not difficult, and surely most of us will be able to learn this very quickly. If you want to learn this, you can check out our free online video course where we'll go through each of them in much more detail. Step 4, now it's finally time to search for the right investment. However, don't rush to buy your first stock. Instead, create what we call a watch list stocks. You can even start with companies that you are already familiar with. These might be companies that you are a customer of or you come across every single day. Within my own life, I can easily name at least 20 companies that I interact with on a daily basis. Then from these companies, we can study their financials and see if they are worthy of our time to research further. We have also created a quick checklist for you so you can easily identify the companies that have good financials. Remember to download them in our show notes. Next, just add the companies that interest you into your watch list, and then you can start monitoring them. Remember to categorize them in terms of the value that they have in the market. Are they asset value based, income value, or growth value? So in this way, you will know why you will want to buy them. Try to collect around 5 to 10 companies before moving into the next step. Before we talk about the last step, we have a bonus step for you. Because before you start investing, you will need a brokerage account, and you need one that is reliable and also cost effective. In that way, it will help save you a lot of trouble and money in the long term. And luckily, the sponsor of our video, FSM1, is definitely a brokerage that fits those criteria. FSM1 is one of the lowest cost brokerage in Singapore, but on top of that, it is also an integrated financial platform. It not only allows you to trade stocks, but also funds, bonds, and even insurance. You can sign up for a free account right now and remember to use our promo code to get even more rewards on your account. And now lastly is step 5. We can start investing regularly. You can schedule your investment based on the preferred entry price of each of the stock within your watch list, or you can just invest regularly. This method is widely used by many investors and is called dollar cost averaging. If you want to know more about it, we also have a video talking about dollar cost averaging and how you can implement it into your strategy. Anyway, that's it from me. Remember, we have a free online course to help you get started in your investing journey. Do check that out. As always, till we meet again, invest safely.